And welcome everybody to today's Retirement Genius Brainstorm webinar. I'm your host, Chris Orestes, president of Retirement Genius, and want to thank you all so much for joining us today. Today's subject we're going to cover is life settlement annuities and this growing, emerging, multi-billion-dollar marketplace. It's a strong tool to have in your toolbox, particularly to address the unique financial challenges that seniors have brought on by aging and declining health in their retirement. Retirement Genius is an information and resource platform dedicated to helping people achieve a well-balanced retirement. We focus on financial, health, long-term care, and lifestyle information and resources. Our belief is you need to bring all these three elements together like the legs of a stool to create a well-balanced retirement so people can retire like a genius. I want to start by pointing out the fears of retirees. This is what we're all working with. This is what we're all working to help our clients, their families overcome. The fear that they will not have enough money in their retirement to maintain their lifestyle. They are fearful of running out of money. It's one of the top fears when asked of seniors. In fact, seniors polled cited they were more afraid of running out of money while they were alive than they were of actually dying. They don't want to become dependent on others. They don't want to become a financial or physical burden to their particularly to their loved ones. When they're not able to live independently, then the fear of moving out of your home and into some kind of a facility-based care environment, one of the ultimate fears of people across this country, that they will have a need for long-term care and it will end up on welfare, which is what and they'll end up living out their remaining days in a nursing home. So numbers tell us. And let's start out by taking a look at the impact of longevity on retirement. You have today 55 million people age 65 and above. That's 17% of the country's population, and that's a growing number. This is an aging population in the United States of America. And we hear the statistic oftentimes that 10,000 baby boomers a day are turning 65. Well, we've been talking about that statistic for quite some time. In fact, in less than 2 more years, baby boomers start turning 80. So we're crossing some serious milestones when it comes to longevity, aging, and the impact that it has on this country's social services safety net. Because ultimately, 70% of people over the age of 65 are going to need some form of long-term care. Now, for the average couple that would retire today at the age of 65, they are realistically looking at spending in the neighborhood of $300,000 on their medical costs over the remainder of their lifetime in retirement. And when you consider the savings rates that this country across the entire population has to contend with, as of September of this year, the household saving rate for the United States was 3.4% of income. That is not nearly close enough to being able to afford to live comfortably in retirement, age in retirement, and experience the impact of declining health in retirement. But 82% of people surveyed say that if they had to, they could figure it out. They'd be able to afford care. Somehow it would be paid for. Somehow they could access whatever it is they would need. Although 85% of people don't believe they're going to need care in the future and are not planning for it. So you've got a real disconnect here. Not enough savings, not enough people understanding the reality of the impact of aging and the inevitability of things like health and long-term care needs in an aging population. But there's some good news, and that comes in the form of where we are with insurance ownership in this country. Insurance ownership has been on the rise and is pretty steady. In fact, 3 out of 4 American adults now today own some form of life insurance. And when you look at the statistics age-wise, between 58 and 76 years of age, you've got 58% of that population owning some form of life insurance. And for people age 77 and above, 70% of that population owning some form of life insurance. And when asked why people buy life insurance, the top 3 reasons cited, the number 1 reason, interestingly, by far, is to contend with final expense needs. Secondly, it's replacing income in the case of somebody dying, and then transferring wealth as part of an estate planning, business planning type of approach using insurance. When you look at the numbers, in terms of just how much insurance is out there, you've got almost 261 million in-force life insurance policies today in the United States, with over $21 trillion of in-force death benefit. That's more in-force death benefit than there is home equity in this country today. In 2021, there was almost $200 billion of premiums collected, with $100 billion of death benefit paid out. All-time records. So 2021, going into 22 and now 23, you've seen life insurance on a very solid track. When you look at long-term care insurance, by comparison, almost 261 million life insurance policies in force compared to about 7.5 million long-term care insurance policies in force, collecting about $124 million in premiums and paying out about $14 billion in claims in 2022. So the population for long-term care insurance, obviously much smaller, but the persistency rate of hanging on to those policies once they're owned is exceedingly high. I talk to people all the time who say if they had to make a choice between a car payment and their long-term care insurance premium payment, once they're up into their 70s, 60s, 70s, 80s, they elect for, I will not let go of this long-term care insurance policy almost no matter what. And then when you look at annuities has just been on a rocket ship path of growth for the last 3-4 years. You've got over $2.5 trillion of in-force premium dollars in annuities today. There was $310 billion of annuity sales in 2022. In 21, that was up from 2021, 22%. A lot of twos there, my apologies. And in 2023, annuities continue to be on the rise. Predicted another 14% rise in annuity sales this year in 2023, much of it driven by fixed products. Fixed index annuities, fixed deferred annuities are a real driver today. And a big reason for that is that those products are looked at as a flight to safety in an uncertain marketplace, particularly for seniors, people who are approaching retirement, in retirement, a fear of jeopardizing what they've put away, knowing that there are opportunities to put your money into annuities where you have guaranteed protection, guaranteed returns in a market that has shown uncertainty. And for people who can't afford that uncertainty, annuities has been growing into a flight to safety. So let's talk a little bit more about insurance-based solutions. For annuity solutions, addressing those fears of seniors, okay? That's what I really want to focus on here. One, annuities provide a guaranteed income for life. 2, you can also elect to have a beneficiary in place to continue that income to protect a spouse or beneficiary. You have opportunities for tax-deferred growth. They can function as investment vehicles. They will grow. There's tax-deferred growth inside those annuities. It, as we've pointed out, will protect funds from market volatility, a big reason that's been driving these great sales numbers. And there's tax advantaged income for long-term care and opportunities to accelerate the amount of income that's in an annuity towards long-term care needs. So in the stages of retirement, planning for retirement, living in retirement, and then eventually declining in retirement, annuities can touch a lot of these buttons. You can accumulate money, you can protect money, you can distribute money, and you can use that money in tax advantaged ways to address your impairments and declining health when it comes time to meet the costs of things like health and long-term care expenses. Then, when you consider life insurance policies and how those vehicles, 261 million in-force policies, over $21 trillion of in-force death benefit. Life settlements has grown into a very mainstream, thriving option for seniors in particular, looking for outlets to access liquidity using the life insurance policy asset that they own. And the unique features of life settlements, particularly for seniors in retirement, are one, that it's going to reward the policy owner with a higher economic value the older and more impaired their health becomes. It's one of the most unique financial transactions available in that it will do more for somebody the older and sicker they're becoming. This can then generate liquidity that can augment income needs in retirement and can also be deployed to meet health and long-term care needs. It's the legal right of every policy owner, and many policy owners don't realize this. Many advisors don't realize this. Life insurance policies are a legal asset, is the personal property of the policy owner. And awareness has grown significantly over the last few years. There's a lot of advertising. There's a lot of awareness among consumers, among advisors of all types, not just insurance advisors, accountants, attorneys, people who work in the long-term care world, investment advisors. Life settlements has become high awareness, like a reverse mortgage or a Medicare Advantage plan. This is a very much now a mainstream, very well regulated part of the insurance marketplace. And this is another vehicle that will help drive tax advantage income for long-term care needs. Plus, for the individual who would be doing a life settlement, there's no costs to do a life settlement. There's no more ongoing premium obligations once somebody has completed a life settlement. There's a variety of ways to use a life settlement to derive income, to pay for long-term care, to extend and retain a death benefit with no more premium costs. And there's also the life settlement annuity. And I want to spend some time talking about that today. I want to drill into a bit more the life settlement annuity and how that has emerged, because life settlement annuities are an opportunity for a life insurance policy owner to seamlessly roll over the funds they would receive from a life settlement into an annuity that is specifically set up to help them meet their unique financial needs in retirement and as they encounter long-term care. So what's unique about life settlement annuities is, one, that the industry, life settlement industry, has shown over the years that market value for a life insurance policy tends to be much higher than cash surrender value. It can be 5 to 10 times greater than cash surrender value. In fact, you would never do a life settlement unless you were getting more money than cash surrender value. And of course, term life policies can also be settled and used, and there's no cash surrender value there whatsoever. So this can provide a superior economic outcome for a life insurance policy than rolling over cash surrender value to fund an annuity. And for agents that are using life settlement annuities, they're putting themselves in a position where they can access 3 income streams from a single life settlement annuity transaction, because one, there's the referral fee from the life settlement itself. 2, there's the annuity commission from the rollover into the annuity. And 3, if it's a term policy that's converted, there is term conversion commission that is also available. Forms of life settlement annuities, I'm going to focus on three that I want you to remember and pay attention to. One is the impaired risk SPIA. So this is an underwritten SPIA that is taking into account impairments to increase the rated age of the annuitant, therefore increasing the amount of money that can be paid out from the annuity. So the impaired risk SPIA, funded by a life settlement and driven by the life settlement underwriting and life settlement life expectancy data, can have a significant impact on increasing the value of an annuity that otherwise would be issued at standard. The impaired risk SPIA also has a survivorship beneficiary option, so that in case that person expires before the annuity has fully paid out, there's a beneficiary to continue to receive the proceeds. And for the person who would roll their life settlement funds into the impaired risk SPIA, you're looking at, if you get past the break-even date of the annuity, now you're looking at a higher value than what you would have taken in cash. Let's say you had $100,000 you were going to put into an annuity, and the break-even point was 7 years. You get past the 7 years, you're still receiving that income, and now you're receiving more than that cash settlement through the annuity payments. Another life settlement annuity product that we think is a fantastic option is the multi-year guaranteed annuity, the MYGA, providing that guaranteed rate of return over a set time period, say 2, 3, or 5 year rate guarantee period, which has optional free withdrawal periods. This is a tax deferred growth vehicle, so you're protecting your money. We have a 6.15% guaranteed rate of return over a 5-year MYGA that the annuitant could put their money into and either let that money sit for 5 years growing at 6.15%, or establish a 5-year income draw that's equivalent to the 6.15% on an annual basis, with their principal remaining intact. So this is a great product for a life settlement annuity in the earlier stage of somebody's retirement years, rolling over the life settlement funds into this MYGA. But for somebody who is now in a more advanced state of age and starting to think about how do they address their long-term care needs, there's the long-term care-based fixed index annuity, the LTC-based FIA, which provides resources to help cover long-term care expenses, again, growing at a tax-advantaged rate, a guaranteed rate of return of 5% in this product, and then an ADL-based income enhancer. So if the person who has enrolled in this annuity gets to a point that they now need long-term care and they want to trigger their long-term care benefit rider, their ADLs qualify them for it, there can be a 2 to 3 times increase in the value in the annuity. So let's say $100,000 went into this annuity, sat there for 3, 4, 5 years, and then growing at a guaranteed rate of 5%. And then this person had long-term care needs, triggering the benefit. Now they would be able to 2x or 3x that 100,000 plus its interest that it's grown to start deploying towards their long-term care needs. So what's driving this opportunity, marrying the life settlement to the annuity to create this life settlement annuity marketplace, is the life settlement market growth that's been going on now for some years. Going back to 2017, you had $2.8 billion of life settlement transactions completed. By 2022, you were at $4.5 billion. And in 2023, though, that number should be the same or better. We're approaching a point where you're looking at, before you know it, $5 billion a year and growing in life settlement market activity. And when you compare the impact of settlements in rescuing policies, settlements versus policies abandoned. Think about it. In 2021, you had about 3,000 policies that were settled through a life settlement versus 9 million policies that year that were just lapsed. You had $4 billion of death benefit that was rescued versus $642 billion of death benefit that was just abandoned. $750 million was paid out to policy owners across these 3,000 life settlement transactions. And cumulatively, it was 7.8 times X higher than cash surrender value that was paid out in the form of the life settlement. Some very compelling numbers, and also a lot of room still to grow. When you think of life insurance policies, it's important to remember again, life insurance policies are assets. They are personal property owned by the policy owner. And a great way to look at it is compare a life insurance policy to your home. They're both assets. The owner of that asset has personal property ownership rights, which include selling that asset at its market value in a thriving marketplace. The home resale marketplace, the life insurance resale marketplace. And think about it, you're making mortgage payments on your home for years. And one day when you no longer intend to live in that home, do you just abandon the home? Do you drop your keys in the driveway and walk away? Well, of course not. You're always going to sell your home for its market value. Well, it's the same thing for life insurance policies. After years of making premium payments, why would you just drop your keys in the driveway of a life insurance policy instead of exploring and accessing its market if that policy and policy owner qualifies? So look at the marketplace. Again, we've got over 260 million in-force life insurance policies in this country today. Seniors who could qualify potentially for a life settlement own on an annual basis about $200 billion worth of policy death benefit. Now, again, last year, about $4.5 million of life settlements were settled. And a big driver of that is this increasing awareness, consumer awareness, advisor awareness, TV commercials running on a daily basis. In fact, if you are watching any of the cable news, cable sports, you're listening to satellite radio, you're online, you are seeing for seniors advertising on a heavy basis on Medicare Advantage plans, reverse mortgages, and life settlements. Those three only come in behind the drug companies and their advertising on drugs when it comes to creating awareness to the senior-based population that is the population for life settlements. Remember, the older and sicker somebody is, the more likely it is they're going to qualify for a life settlement, putting them in a position to take advantage of a life settlement annuity to be designed to help meet those unique needs that they're facing financially in retirement and as long-term care is approaching. So what are the realities and what are the solutions? Well, as I pointed out, the U.S. is an aging population. There are limits to the financial safety nets. There are limits to what's going on with savings. And there are realities, despite people's perception that they will never need long-term care, that this will never happen to them, that they will retire with a secure retirement. People are underestimating the real cost of retirement, the lack of resources that they've compiled, the very small portion that Social Security can actually cover, and they're not adequately preparing themselves for the realities of living in retirement and eventually confronting long-term care over many more years still to go in their life. So the use of alternative financial solutions such as life settlement annuities, LTC life settlements, has become a growing part of the mainstream financial options that seniors have in this country, that agents, advisors are working with to help aging baby boomers and even older, their aging parents address these realities. You, as agent advisors, are uniquely positioned to be problem solvers using these tools versus salespeople who are just trying to sell the product of the week. You want to broaden your horizon beyond what you focus on, to have a fuller toolbox with solutions such as what you can accomplish using life settlement to fund a life settlement annuity, to put somebody forward with a long-term care life settlement. Those kinds of options are uniquely designed to meet the needs of seniors, uniquely designed to pay out higher and higher amounts the older and sicker somebody becomes. And these are tools that are actively available for you to be using to put yourself in that problem solver mode. So I want to thank you all for joining me for today's Retirement Genius webinar. I'm happy to share with you our latest white paper, the Life Settlement Annuities white paper. Just give us a call, 866-602-5000, or hit us up with an email, info@retirementgenius.com. Today's webinar has been recorded. We'll be happy to share that with you as well. As always, I encourage you, visit us at retirementgenius.com, our advisors only website, advisors.retirementgenius.com. Check out our resources, such as our podcast. We're a Forbes podcaster. We have a lot you'll find online, a lot you'll find in our websites. We'd love to be working with you, explain to you more how you can access the information and resources, be a partner of us to help distribute those to your client base. Let's get more tools in your toolbox. Let's get more solutions in your hand. Let's make sure you're a problem solver. And we're here to work with you. I want to thank you so much for joining today's webinar. Can't wait till we talk to you again soon.